Hey guys, welcome back. Welcome back. So, tomorrow is the Fed announcement. And if you're following me in my Twitter room, you'll see that it's a risk off day. I have a couple of positions on right now on Lulu, which is a bearish butterfly plus a SPY bearish butterfly, and UVX. I have long calls. Those are in some big trouble, but they're all the SPY is an expiry on Friday, so I'm not too concerned about it. It was an all-in, all-out binary trade. And the Lulu trade expires on Friday as well too. Again, it was an all-in, all-out binary trade. And the UVXY I do have time on though. Those are November 15th. Okay, so I'm gonna start off right now by doing something new now. This is going to be a long video, but it's going to be really cool because you're going to see how I go about back testing things. And um, what I usually try to do is I usually kind of come up with an idea and I try to see if it really actually works. Now, I combine 40 years of trading experience into everything that I'm doing. So it's not just like a random arbitrary thing where I'm just, trying out new tricks and new tools. It's something that I have cultivated for 40 years as a floor trader, as a institutional desk trader, as a prop trader, and I try to apply it to the screen. So what we're going to do right now is a really cool thing, and I'm going to do some back testing. Now, um, what you're looking at here is a customized algo that I built. And anytime you see this chart turn yellow, what it means is that something is either in an overvalued condition at a high or potentially at an undervalued position at a low. Now, what exactly is over and undervalue, and why is it important? Well, sorry guys, I think I have a dog barking here. Well, over and undervalued, somebody says, I like overbought and oversold. Kind of, but not really. The math behind it is quite sophisticated, and this algo is basically taking 40 years of my experience and what I teach on my one-on-one coaching and making it kind of a simpler, easier method to use to spot under and overvalued situations. Now, what's the difference between overbought and oversold? Well, what value is the price at which institutional traders or professional traders will usually add to existing positions. So, an easy example of value is something along this lines. A buy campaign is started. Now, let's say that an institution wants to do 10 million shares of something, okay? So let's just say 10 million. They don't just buy 10 million shares. It doesn't happen like that. What happens is they'll buy a million shares and they'll see what will happen with the price. Now, if the price goes up too far, they just stop buying. Why? Because they're waiting for the price to drop back down. Now, why do they do that? Why do they stop buying? Or the reverse would be true if they're doing shorts. Because if they were to buy 1 million and it moves the price too far, if they buy 10 million, they're just going to shoot the price up way too fast against themselves. And they can't do that because what that means is that their average cost, let's say they have an idea that something's going to get up to this level. Well, they want to be averaged into that level. They don't want to have 10 million shares with a 9 million average up here, right? What they want to have is they want to have 10 million shares with an average around this price. So what they do is they buy, they let it come back, and they buy again, and they watch and see how far they drive price, and then they let it come back, and then they buy again, and then they let it come back, and then they buy again, and ultimately they've done their entire campaign to buy 10 million. They get to that price that they're looking for, and their average cost is going to be around here, okay? Rather than their average cost being too high. So what does that do? That creates these stair steps that many of you know as higher highs and higher lows, but do you really understand what's going on and why it's significant? Now this is a very, very obvious example of value. So this would be value, undervalued, this would be overvalued, this would be undervalued, this would be overvalued, this would be undervalued, this would be overvalued. Okay, and so that's how institutions do things, and they follow a very specific program. This could be a market maker, this could be working a 1 minute chart, or this could be a giant pension fund working off of a weekly chart. But that's what value is, and knowing where value is extremely important to your trading. So other than taking my full course and going through and understanding the different value levels, now again, this is a very obvious situation, but there's always value. Even in something like that, there's value. Okay, there's always a value level. So what my little indicator does is it tries to show you where value is by turning yellow in this case, and it's all based upon this oscillator down here. So what we're going to look at here is we're going to look at situations where now again, remember, this is not an absolute. This just is saying, hey, you're getting to an area where value could be recognized by professional traders. Okay, and so it doesn't mean that there is value there and it's going to sell off. You can see here it turns yellow and it does sell off. Here it turns yellow, it doesn't rise, but you can see it goes deeper and then it turns yellow again and then it rises and it gets to a yellow area here and sells off, gets to an undervalued situation here and goes higher. So it's not a be all and end all, because sometimes that value level will hold, and other times they'll go for deeper value because there's multi-time frame players that are in play. Okay, so is it a perfect tool? No, but it's the best damn tool you're ever going to find on the market. So what are we going to do? What are we going to do, and how are we going to use it? So I really don't day trade anymore on a 1 minute chart, but I do like to use a 15-minute chart. It seems to be very comfortable for me. We're going to go through, we're going to actually do some actual testing with this, and it doesn't really matter what time. I'm just going to take the last 30 days just because I don't really feel like going on my going back on my computer, but we're just going to walk through it. Okay, now the other thing that we're going to look for is when we get to value, we don't just want to be running in willy-nilly. We want to see some evidence that a buy campaign has started or a sell campaign has started. So what does that mean? We would see a price reaction, we would see a pullback, and then we would see a move above that price reaction. Okay, the opposite would be true for a sell campaign. We'd see a price reaction, we'd see a pullback, and then we'd see a move below that price reaction. So what we're going to do is, using a line chart on close rather than using candlesticks, we're going to look for some confirmation at value. When we see this, we're going to buy. When we see a sell campaign we think is starting, we're going to sell. So hopefully you guys understand that. If not, you'll get the idea. So I'm just going to go by candle here, and we're going to walk through and look for situations where we get, first of all, under or overvalued. Okay, so we've gotten to an undervalued situation right here. So what we want to do is see a price movement, a pullback, and then a move above that. Let's see what happens here. There's the price movement, and it takes off. Now we're getting into an overvalued situation. So in this particular case, we'd want to see a down move. We want to see that, not that. And let's see if we get that situation happening. There's a down move. There's a pullback. And now we have to clear this low. So let's see if we can actually clear this low. And close below it. We do not. So we go up to higher value. You can see how that would have kept us out of trouble. Now we're in higher value, and here we have it. We have a price movement, we have a move back, and we did just clear that low. So what I would do is I'd say, okay, that is a good place that a new campaign could be starting. Okay. So let's see what happens now off of that. And what you could do in a situation like this is I might, just short 100 shares, right? Or what I will usually do is I will just go and I'll just buy 30-day put options. And it's a day trade, but if I can get a 30-day put option with some decent delta attached to it, if you don't know what delta is, you want to delta is the rate of change that the option is going to make per $1 on the stock. So if I can get a good put option with some decent delta attached to it, then I'm just going to do a 30-day. Now if I can't get a good delta with a 30-day, I might just do a 9-day or something like that. So we would short here. Let's see what happens. And we're looking for the market to go lower. Okay, boom, it jumps higher, but it's also getting into an overvalued situation again. Let's just hang with it. And then boom, we get that correction. Okay, and down we go. Beautiful, baby. How do you like that? So in a very short period of time, you now have we're getting now down to an undervalued situation. Okay, and what we're looking for is we're looking for the market to have a move, make a correction, and then come back just like it did there. So what I would probably do is take that off. So let's just mark that in right here, because we're going to come back, we're going to look at these. And I'm going to warn you guys, this is going to be a very, very long video. So if you want to skip to the end, great. But if you want to watch it, just watch it. So that would be a winner. And let's just make that green. And now we're going to reverse and we're going to go long. And it doesn't work out. And now we're in deep pain. Shame. But we're in an undervalued situation. And now we're looking for a price move higher. And there it is. So now this would be a loser, okay? So let's just be honest about this. Let's mark this a loser. That was no fun. Not a fun way to start. We're going to come back and measure it. So now we're going to get long. So you might say, Steve, well, should I close this position or should I open a new position? I would just open a new position. That's what I personally would do. Not looking good. Now I actually already did this, so you're going to actually see some examples of it. We're getting into an overvalued situation right here, so we want to look at taking this position off. We're still long. Remember, we're looking for a down move or retracement. We're looking for that to happen. And we're still long. Remember, we're long off of this level right here. So we've made back pretty much all that we lost on that move. Okay, we're in an overvalued situation, but we're not going to commit to the trade unless we see our pattern here. We're just going to stay in our long position. We've been in it for 1, 2, 2.5 days now. Boom, there it is right there. Do you see that? So we would get out of that long position because we are in an overvalued situation, and we reverse and we would go short. So that would be a winner. Okay, let's continue. Okay, so we're short now. Beautiful, baby. Look at that. Now we're getting into an undervalued condition. And right there, undervalued, get your price movement, a retracement, and a break above. So here we're going to get out of our short position, and we're going to get into a long position with some profit. So we're out there. And we are going to get long. Now we're long because we believed we were in an undervalued situation. We're still long. We're still long. We haven't got overvalued. Okay, now we're getting a little overvalued. And right there. Right there. So we'd get out of our long position at a profit. Okay. And we're short now because we're in an overvalued situation. Let's continue. We're short, so that's not good. Big price movement. Now we're getting into an overvalued situation again. And there it is right there. So we'd get out of that short at a loss right there. No, actually right, I think it's a little bit further. Yeah, right there. So we're going to get out of that, and that's going to be a loss. Okay. So that's a loser. And we're short again. Remember, we're in an overvalued situation, and we got short again here. So let's continue. There. We get to an undervalued situation. We get that. That's what we're looking for right there. Okay. And we get out of our short position for a winner. And we're going to get long again. Okay, we're getting overvalued now, and we're long. Technically it happened here. It's really close though. I just tried to do the most obvious one. So here's that we're looking for at the long end. Remember, that's what we're looking for. And we're out of that long position with another winner. Okay. Now we're short again. Now we get into an undervalued situation, and we get another long signal. So we get out of that short, we get into a long. It's about the same level. We don't really need to mark it. Right, but we're long again. Boom. Boom. Now we get to overvalued situation, and there it is right there. We get out again here. Now it's really small. I'm not going to include the the small ones, but just keep in mind that we're short again. And they're both small winners, but I'm not going to really. So we're short again. Boom. Now we get to an undervalued situation. We're going to look for longs. And there it is, right there. So this would be a winner. There's two small winners in there too, but now we're long again. We're looking to get, there we are. We're in an overvalued situation. And there it is right there. So we're out here out of that long. With profits again. Now we're short again. Get to an undervalued situation. So we're looking for a long. And there it is right there. So we get out of our short position for another winner. And now we're long again. Okay, now we get to an overvalued situation again. We want to look for short. Now we don't get it, right? You can see here, like we have to take out this low. There's a price reaction, and then as soon as we go higher, it doesn't matter anymore. We have to take out that low. And we're long still. Getting to an overvalued situation. We're looking for a move down, retracement, and then down lower. Right there it happens. So now we get another winner. Are we going to start a sell campaign? Let's find out. We're short. The market takes off. That sucks. And there it is right there. So we were short. We have a loser. But now we're going to close that loser position and reopen another position. So now we're short the market. Get into another overvalued situation. And that's where we are right now. Just triggered. Okay. So now we have this overvalued situation. We had this move down lower, it retraced, and now we just triggered. So now it's triggering a short signal. Okay? So let's go and add this all up and see how we do, shall we? Okay. So I'm just going to add it in the calculator over here. So we had a loser here, and this was for $1.61. So we're going to go negative 1.61. Calculator, I'm doing it over here. Okay, so that was a loser. We had a winner here, and that was for $2.19. So plus 219. We had a winner here, and that was for 89 cents plus 0.89. So we're up $1.47 so far. We had another winner here, which was $1.62 plus 162. Okay, let's keep going here. We had a small winner here for 47 cents plus 0.47. We had another winner here for 263 plus 2.63. And you can see we're already up $6.19. We had another winner here for $1.12 plus 1.12. Then we had this big loser here for 372. Ouch. That's going to hurt. Minus 3.72. And then we had a winner here for 323. So plus 3.23. A winner here for 339 plus 3.39, and a winner here for 635, baby, okay, plus 6.35. And I think we had a loser to start. Yeah, we had a loser here for 615. So now we go minus 6.15. And a winner here for 331 plus 3.31. Not bad. How long was that? That was started on 9/30. So about a month, right? Approximately a month. Taking $13.72 out of the SPY, watching a 15-minute chart, using value and confirmation. Okay, great way to day trade. However, I'm going to warn you, this looks really great in hindsight, as all backtesting always does. But you have to stay super focused every 15 minutes. You have to be very aware, when you're overvalued, when you're undervalued. Watch for signals, watch for levels, watch for those patterns that you're going to get that look like that. Okay? And, doing it on the hard right edge, as great as that looks, it never works out like that. But even if you could come close to that, right? Even if you did that, if you divided that by 50%, that's still $6.86 that you take out of the market. Okay? And I think that, in reality, I think what usually happens is, you're going to make errors. So I would reduce that even by, in my experience, when you have something that you're backtesting, I reduce that by, so 6.85 divided by 2. I'd say in reality it's going to look more like that, right? That's more what reality looks like. And that's kind of how when I look at things, I kind of say, okay, this is a perfect situation. If I could have done all of these things perfectly in real time, and then I divide it by 2 and I divide it by 2 again. And I say, okay, now does it make it worth my while? So is it worth my time to take $3.42 out of the S&P 500, per month? Now, this is just 1 month, but let's assume that I did this for 12 months. Yeah, that's worth it, right? So if I did 10 contracts, right, which would be, if you did 10 contracts, that's $3,425, right? Approximately, because you're going to get theta. But let's say you did 15 contracts, more like it, right? Depends on your delta, right? Depends on how big your delta is or how small your delta. Remember, you're only in these trades for a very short period of time. 1 day, 1 day, 2.5 days. So you're going to get, if you're buying strikes that are at the money, you're going to get good, you're not going to get a lot of theta decay, right? This one lays 2 days, right? I mean, this one, 1 day, 1 day, 2.5 days, 1 day, 1.5 days, 1 day, 1 day, 2 days, 3 days, 1 day. You can see these are all, very short periods of time, so you don't have to worry about theta too much. But you want to make sure you got a decent delta so that you're going to get that price change. Okay? So this is just another way that you can use this algo if you're interested in using this algo. I didn't teach this particular method in the training that I did with the algo. It was a really boring day, and it's going to be boring tomorrow because I'm not going to do anything until after the Fed. And there you have it. Now, some of you that are in my room say, Steve, well, you didn't buy anything. I didn't see you do anything buying. You just shorted, right? So you would have made money on that one. You would have made money on that one. You would have made money on that one. Would have made money on that one. Money on that one. It still would have been okay, right? So why am I shorting? Because I have a short fundamental bias. But that's for my swing trading. So my swing trades, okay? When I day trade, I don't use the fundamentals that much, okay? When I day trade, I will sometimes, do these shorter term trades. Now, in all honesty, this particular month, I wouldn't have bought any of these. None of these longs I would have done. But doesn't mean that you can't, okay? That's just me. I'm a much better short trader than I'm a long trader. I'm just showing you what how you can use this tool. So if you're interested, it's going to be on sale for the rest of this month on my website, and then it is going to jump in price from $4.99. I'm flirting with like $800. Not sure yet. I'm not going to say for sure it's going to go to 800, but if you want to be absolutely sure and you want to use this algo package, it also comes with a full swing trading course. I'm just showing you how to do some shorter term trades with it. Okay? Why are you using line charts, Steve? Because line charts you can see the pressing limit orders a lot more clearly, and you don't get faked out as much as you do at candles. Okay? There you have it. Hope you guys enjoyed that. Told you it was a long video, but it was worth the wait. Thank you. Bye for now.